Alright guys, how's it going? I had to make a fix to the toolbar, the reader, the new indicator. So I'm putting that fix up on the website now. Okay, it's in the total package members area now. And I'm going to put it in the indicators package area. You can download it and then we'll get started here. Alright, so I'm going to go ahead and start running it and show you what's going to happen. And by the way, once you have it on and it's enabled, make sure this blue button is on. That means it's really ready to go, auto-enabled. And then you can click on this. So this is what your order settings should look like here. And then it has your Bloodhound template up at the top right here. And we're going to build all of this from scratch. Alright, so I'm going to go ahead and run through and show you what's going to happen. While you guys are getting set up. So it's just entered 10 contracts, but it's entered those in sets of 2 and 4. So 3 sets of 2 orders each and then 1 set of 4. And it's going to take that initial 4 off right here at the 61.8 retracement. 1 tick below it. That's what this number 4 contracts. That's my D order set. It's my 4th order set. It's going to take those 4 off at the 61.8. Then it's not enabled, PEP. You have to enable it. You right-click, strategies, and then you have to enable right here. Remember, you have to set it to replay now if you're connected to replay data. So change this from sim to replay if you're in replay mode. That'll stump you. All right, so we entered on volume divergence, double divergence in the RSI, the area on the 1 minute, area on the 5 minute, and the lower median line with the trend on the 30 minute. And we're going to take those first 4 off right there. And then watch what happens after that bar closes. You can see I have my limit order down here. This is how I'm scaling in. So if you're going to scale in and out, you have to plan for that in advance. When are you going to scale in and why? What has to happen for you to scale in? And then where do you want to scale in at after that trigger happens? So the trigger for this is going to be, first of all, this order has to get filled. I have to exit those 4. And if that happens, then 1 bar later or 2 bars later, it's going to tighten this set of 4 buy limit orders. Offset from current price 15 ticks. So it's going to tighten this buy limit to 15 ticks below the close of the bar after this order is filled. You'll see that in a second. So when these 4 get taken off right here, and that bar closes, then it's going to tighten up this blue order set. 15 ticks below. So watch when this bar closes. It's going to be the next bar that closes. You see that? So that bar closes right there. The bar after it gets touched, when the next bar closes, then it brings that buy limit 15 ticks below that bar's closing price. So now I scale it out at the 61.8, and then I'm buying back those 4 to try to lock in some profit, eliminate some risk. And then I'll exit those 4 again pretty quickly with a 25 tick profit target. So scaling out, scaling back in, and then scaling out again, and then letting those 6 run a little bit further, and you can see I've attached these two limit orders to sell to that downtrend line on the 5-minute chart. You see it? Order filled. All right, so we just filled the 25, and now we're in the middle. We're about to be breaking out of this baseline right here. One more bar. I have it displaced by a bar. So once we break this baseline by a little bit more, you'll see the stop loss order tighten up. You see that? We just tightened up 2 contracts below the recent swing low, 2 ticks below it. And then we have our other 4 contracts, stop loss still 10 ticks below entry price. So 2 out of the 10 will remain where the initial stop was, 10 ticks below the entry price. And you'll see when we take these 2 off at the 5-minute downtrend line. By the way, those 2 contracts at the center median line on the 30-minute have been adjusting the whole time. So now that we get that big wide-ranging bar, it's tightening up these 2 stops behind it. We just took the 2 off at the 100-tick profit target. So we're down to 2 contracts now. And the stop is up behind this big extreme spike in volume below that bar. Yeah, volume is still on. You guys can hear me, right? Okay. So now we have the last 2 sitting at the 30-minute center median line right there. Right now it's at 21. I don't think it's going to adjust anymore. So we're about to get filled right there. So this is what we're about to build out. Order filled. Has anyone actually been able to load BlackBird and get everything up and running? Okay. So when you get that error message, I forgot because I have a different version than you have. I didn't think about that. When you get this error message from Bloodhound, you click on ignore. You should only have to click it once or twice. I think once. And if you get it for the Divergences Pro, you just click ignore, ignore, ignore as many times as you have to, and then you load it. All right. So everybody load BlackBird onto their 1-minute chart. Even if you don't have the workspace, nothing's working, you can't figure out how to move the files around, you're stressed out, you're not getting it, it's crazy. Just open a 1-minute chart of crude oil and add BlackBird. Just do that. That's all you really need to be able to do at this point. And for those of you that have actually moved the BlackBird template file into place and have moved the Bloodhound template file into place, go ahead and load this TTP BlackBird test 1. And if you want to do it just like we're going to do it, you want to download replay data for August the 23rd. And I'm going to give everybody a couple of minutes. I'm just going to go get some water. So just everybody try to get up to speed with me. You've got access to all the files. You want the workspace and the workspaces folder. You want the Bloodhound template in the Bloodhound templates folder. And you want the BlackBird template in the BlackBird templates folder. And when you add BlackBird through strategies to that 1-minute chart and you want to enable it, you make sure that it's set to replay right here. And this is how you turn it on, by enabled and replay. count replay enabled true, and this is the BlackBird settings, and it should open up and look just like this. All right, so I'm going to leave this window up for a minute. I'm going to give you guys about 2.5 minutes to get up to speed here, and then we're going to build it out from scratch. Okay? So everybody try to get lined up with us. And when you load it and you get that error from Bloodhound right here, you're going to want to select ignore until it goes away. Okay? Yeah, it's probably going to load that at the bottom. That's just the name of the BlackBird, the Bloodhound template. So it's loading Bloodhound at the bottom of the chart. So that's fine. Yeah, it'll say BBCL geometry, right? Geometry vol div. That's just the name of the Bloodhound template that's being used in BlackBird. Okay, so this is fine. This is correct. It's going to be that bottom subpanel. All right, so I'm going to just assume that everybody is good to go. For those of you that aren't, just try to follow along, and then we'll make sure that you will be good to go for the next session that we do. So like I said, I had to fix a couple of errors in the reader that allows us to do the things that we can do now. It's a new indicator. It's called the reader value. Let me just show you that. So it's here, right here. It's the reader value indicator, which gives us the price value of each of those lines. Okay, so there was a problem with the way that it was updating. Sometimes it would, sometimes it wouldn't, and that was fixed this afternoon. So that's why the even newer update just now. All right, so what we're going to do is we're going to build this from scratch. So I'm going to completely remove BlackBird. And I'm going to go back to 8:48 Central Time. So if you're Eastern Time, that's 9:48 on August the 23rd for crude oil. And you really need the workspace that I sent you just now for this to work correctly, or you need to open up a 5-minute chart with the full 24-hour session, and then a 30-minute chart with the NYMEX Energy RTH session, the regular trading hours, the 9 to 2:30 session Eastern Time. Okay, I'm going to go ahead and delete everything from this workspace. And I have these charts on the left set to always on top. So if the toolbar gets behind that somehow, because it's set to always on top, you can just deselect that and the toolbar should show back up. All right, so now what we're going to do is load BlackBird onto this 1-minute chart. And I'm going to start with blank slate here. So I'm going to select clear, and I'm going to save this as training session 1, September 2016. And that's just a blank slate. And then OK. Make sure it's set to replay because we're connected to replay data. I'm going to start auto-enabled on, backtest mode false. And that's what it should look like. And then I enable it right here. That's how you turn it on right there. And then OK. All right, now then, to start building this thing out, you click on the order settings at the bottom right here. So once it's enabled, you'll have the chart trader on the right. You may have to select that the chart trader is on from the strategies properties menu. Show chart trader. That should be true. And I keep this debug message on because it will display an error message in the top price panel in the left side if something's wrong. You don't have it on because you didn't turn this to true. It'll be a drop down once you set that to true. Start auto enabled on. When you set that to true, this will pop up. And then you set that to false. And then you want to make sure chart trader is on and leave this set to false. And that way, if something is wrong, you're not doing something right, then there'll be an error message pop up right here. It'll be a black line with white lettering saying that it didn't attach the order because the order was below your entry price or something to that effect. If you have, the long and short backwards, it'll tell you that you've made a mistake. All right, so we click on order settings to open it up and start building out our orders. And what I want you to do first is load the entry that we're going to use. So we're going to click on signal, and we're going to use a bloodhound signal. This is for the entry. So what's going to actually be the entry signal? We're not going to get into building exits or anything like that yet. We're just going to do trailing targets and trailing stops for today. All right, so I want to use a bloodhound signal. So that means, well, you can see I did that. So you want bloodhound or indicator based? We want bloodhound. So now you use the drop-down menu to load the bloodhound template file. So you click on the ellipsis, and that opens the bloodhound user interface. And you want to go to File, Open, and you want to select the CL Geometry Vol-Div, which I gave you to download. And that needs to be in your Bloodhound Templates folder, this directory right here, if you haven't put it there already. And then you just click on Open, and now that's our entry template. And it has the divergence is pro in there, it has the relative volume, and then the reader from the 30, the 1, and the 5, and then it has volume divergence in there as well. Right here, this is the entry. Okay, so you click OK, and now it's loading it. Yeah, you can change the name to whatever. We'll just say Bloodhound entry. And for the entry signal template, you can use the pull down up at the top. Let's say you have 20 different entries. You can change that on the fly, but we're not going to get that advanced today. I'm just going to set it to entry. Okay, this is the name of the template. This is what I'm naming the type of entry. It's a Bloodhound entry, so I'm going to name it Bloodhound entry. This is the name of the template file, Bloodhound template file. And this is the name of the entry logic tab within Bloodhound. We don't have an exit signal, so we don't check that. And appearance, yes, I want to show it on the chart. That's what's showing up at the bottom there when you enable it with the one that's already pre-built. And then, yes, show the racing stripes just to ensure that I'm actually getting the signal. And that's it. And then you just click anywhere else. And now it's loaded. You see that? So again, that's the name of the template, Bloodhound template. This is the entry logic tab. And I'm going to show it on the chart and then show the racing stripes. All right, now we're going to enter 10 contracts. So I'm going to build 3 order sets with 2 contracts each, and then another order set with 4 contracts. And then I'm going to build a scale back in order set with those same 4 contracts. So first order set is going to be a market entry, 2 contracts. I'm not going to worry about doing all this fancy stuff with limits and stop limits and all that. All right, and then I'm going to add the profit target here to, we'll do the 5-minute baseline first. All right, so remember, I'm drawing in the baseline here, the trend line on the 5-minute, and we're trading, and on the 5-minute, we're going long in a downtrend. On the half-hour chart, we're going long on a pullback and an uptrend. So we're trading with the 30-minute time frame, trading counter trend on the 5-minute, definitely counter trend on the 1-minute. So the first, natural place to get out of this would be at the downtrend line on the 5-minute. So that's going to be the first profit target. So I've already set it to custom. So now when I drop down, initial placement, where do I want to initially place this? I don't want it based on price. I want it based on that 5-minute downtrend line. So I set it to an indicator value. And then I have which indicator do I want to use. So I click on configure. That's going to open up the indicators dialog window again. Now I want to load the TTP reader value. TTP reader value. All right, there it is. So now if it's a down-sloping baseline, I want to exit part of my long position there. If it's an up-sloping baseline and I'm trading short, I want to exit part of my short position there. So this is probably a little bit, it may feel like it's backwards, but you're not thinking in terms of what is the type of order. You're thinking in terms of what is the type of trade that I'm trying to exit. So I'm trying to exit my long trade at the down-sloping baseline. It's going to be a sell limit order, but that sell limit order is to exit part of a long entry, right? So this is where it's a little bit confusing. It can be confusing until you realize that it's really the most intuitive way to do it. But it feels a little different because you're used to building this stuff out in Bloodhound. And you're always thinking in terms of order type rather than trade type. So now we're thinking in terms of trade type, if that makes sense. I think it does. All right, so we're doing the 5-minute chart. from the reader value, 5 minute, because we're looking for the 5 minute downtrend line, and we're accessing all of this from the 1 minute chart. Okay, I can set this to only look at the current workspace. And then I want to read it from the base chart, from the 1 minute chart. In this case, with the reader value, it doesn't matter. This is actually redundant. I think I may take it out in the next version of the toolbar, which actually works much, much better. So that's it. We're going to exit those two contracts at the downtrend line on the 5 minute, and this is how we do it. We're going to exit part of that long position at the downtrend line, which is a down sloping baseline from the 5 minute chart. Now, I could displace it and get all cute and all that. I'm not going to worry about getting, into all of that. But I do want to exit 2 ticks before we hit the baseline because, maybe it doesn't make it all the way back to it. Maybe it just comes within a couple of ticks. So that's going to be offset down 2 ticks for the long trade. We're going to be exiting a long trade 2 ticks below the baseline. So negative 2 ticks. And then it automatically does positive 2 ticks for a short trade. That's what this little button here is for, is to mirror long and short. Because remember, in Bloodhound, everything is always long and short at the same time. You're not building conditions independently. You're always doing both long and short at the same time, which is good. You're saving time and you're saving processing. You're not having to type out every single one of those conditions. Basically, you just think about it in terms of the long, and then it does the exact opposite in terms of the short. Greg is asking, here is a link to yesterday's. Okay, cool. Thanks, Greg. Appreciate that. Oh, I see. Okay. Because you were recording it through your speakers or something? I might be able to tweak the volume a bit with the program I have, but yeah, if you could get the other one, that'd be great. All right, so that's it for the first order set. All right, now, this is the tricky part. If I leave it alone right now, that order is going to go in at the value of the baseline at the time of the entry. It's not going to update. If I want that profit target to adjust its value with every new bar, then I have to tell it to do that with these trailing actions. So when I click on that trailing actions tab, I want to say yes to movement. I want custom movement. Action closest to price is the only one you need to worry about for right now. All of this other stuff, this is for building out the order of when to do what. So you may have 20 different rules, and you have to build an order for those rules. So this has to do with building out the order of flow, basically, for the different rules. But we're only going to have one rule here. Okay, so action closest to price. All right, so we have a custom trailing. It's either custom or none, so we want custom. Action closest to price, which is the default, and then we add new. All right, we don't need any delay. We want to start doing this immediately because we want to match that downtrend line price. We don't need a trigger because we're checking this every single bar. And we'll just go ahead and say that now. We're going to do this indefinitely, essentially every single bar. Repeat every one bar, you see? So we're going to do it every bar. And what are we going to do? We're going to move the order to not price, but the indicator value. Once again, that 5-minute baseline. So we go to TTP, reader value. We set it to the 5-minute chart. And we want to exit the long at the downsloping baseline, exit a short at the upsloping baseline. So it's essentially the same exact condition as our initial placement. We're just updating the value of it every single bar 2 ticks below the baseline. And that's it. Everybody with me so far? Surajit is asking, is it ever possible to prevent entry if the channel width is too small? It will be possible in the future. But right now we can't tell how wide the channel is. That's not true. That's not true at all. I could require that the auto line be greater than the baseline for an upsloping channel by X number of ticks. I can do that within Bloodhound. I can't necessarily do that just in BlackBird alone. I would have to have Bloodhound to do it. I would need that comparison solver, and I would need one of the look-back nodes to make that work. But yeah, I could do that with this new indicator, yeah. I don't want to confuse people with that just yet, though. All right, so that's our trail for the profit target. Okay, so now what I want to do is I want to add a stop loss order to this. I'm going to initially place it at a fixed 10 ticks. You could initially place it at, whatever. You could also have a fixed trail to trail any one of these lines. So you could set that to a fixed ATR value and trail it. That's one way of doing it. I don't like that at all. I think it's much better to exit directly at a target and trail up your stop just as a protective type of a thing. If you're consistently exiting with a trailing stop, and that means that your exit efficiency is absolutely horrible, which is one of your most important stats. It's the top 5 anyway. All right, so we're going to do an initial 10 tick fixed. Now once that's in, then we can open it up and get queued in here. All right, so yes, we do want to do some trailing actions. We want to do some custom. We don't want any standard. That's garbage. So we want a custom rule. And what we're going to do, we could do any number of different things here, but what I'm going to do is when the baseline on that 1-minute chart is broken, then we're going to tighten up this stop behind the most recent swing low. So I don't need any initial delay, but I do need a trigger for this one. And that trigger is going to be an price versus indicator value. So I'm going to look for when a bar, price bar on the 1 minute, is going to be larger than the baseline. Let me draw all this in so it makes sense first. All right, I'm going to go ahead and save this and draw all of this in. All right, so we're attaching that first order set right here. And then we're going to trail it. Right, we're going to trail the stop, and that stop is going to go 10 ticks below the low here. And then once we have broken this baseline right here, once we've broken that by about 6 ticks, let's say, Then we're going to trail the stop up behind the most recent swing low, which may be here or, somewhere up in here. All right, but first we have to build that condition, breaking the baseline on the 1 minute. So we're going to trigger it based upon price versus indicator. And the indicator is going to be once again the reader value and it's going to be a downsloping baseline for a long trade, an upsloping baseline for a short trade. We're going to attach this to the 1 minute chart. Okay. This, like I said, this doesn't matter for this indicator. It's always going to be from the base chart. Yep, we're good. And, oops. I want to be above it by 5 ticks. Okay. I don't want to look for just when price is equal or above it. I want it to be completely above it for this long trade to start trailing my stop. This is kind of tricky the way that you've got to think about this. We're going to be breaking above that baseline on the 1 minute chart, and when we break above it by this number of ticks, let's say 5 ticks, for a long trade, we're going to be long. Market's going to go up. It's going to break that down sloping trend line. All right. We're long from right in here. Market's going to go up. It's going to break that down sloping trend line. And when it does that, it's going to break above it by 5 ticks. Once it does that, we're going to tighten up our stop from down here to up behind the recent swing low. So we're thinking in terms of a long trade because we're buying right here. All right, so for the long, when the high of the bar is above this baseline by 5 ticks, then we're going to tighten up the stop from here to here behind the recent swing low, 2 ticks below it. Does that make sense? Everybody follow me? So we trigger that price versus indicator. Indicator is the reader value, 1 minute baseline. Baseline for the downsloping baseline for the long trade. It's got to be greater than it by 5 ticks or more. So not equal to or above for the long trade, but actually above it. Not equal to or below for the short trade, but actually below it. And then we're good. And now we want to move that stop loss order to the most recent swing point. All right, and I set the number of swings to 2. Once you start setting it to 3 and 4, you have to play with that SI swing highs and lows indicator that comes with Bloodhound to understand what I'm talking about. But I'm setting it to 2 so that we're only using the widest tops and bottoms. Okay, so for a long trade, I'm using the widest swing and the bottom, the swing low, to tighten up my stop to exit a long trade. We're in a long, 2 ticks below that closest swing low. If you can try not to just even, think about, hearing all these words and stuff, just picture we're in a long trade. We've just found a swing low recently, and now we're going up and we're breaking a downtrend line. When we break that downtrend line, I'm going to tighten my stop up 2 ticks below the recent swing low. That's what this is doing right here. And then 2 ticks above the recent swing high for tightening up the trailing stop behind the swing high for a short trade. And then you click right here, and we're going to repeat that indefinitely. Well, we don't need to repeat it because we're only going to break that one baseline on the 1 minute chart. So we don't even need to worry about repeating it. All right, so everybody with me so far? That's our first order set. We're trailing the profit target with the 5 minute baseline, and we're tightening up our trailing stop behind the most recent swing low once we break the baseline on the 1 minute. Good? So I'm going to save it. Okay, if you hit this save, it's going to close it. If you hit this save, it's actually just going to save it. Good. And when you're doing all this stuff in Market Replay and you save it and then you back up and go back in Market Replay, you'll find that it's all of a sudden not saved. Market Replay is somehow caching the memory, and then when you go back, it's going to bring back what it had remembered for that time. I don't know, it's very weird the way Market Replay caches the memory and kind of goes back in time and will revert your saved files to a previous save. So you got to be careful when you're making major changes in Market Replay and then you go back. I've been saving them as new names and going inside the folder and actually making backups, but it's kind of a pain. But that's only in Market Replay, so I'm not going to be going back and forth. We're just going to build it all at once right now. Go over the Bloodhound entry and market entry. Yeah, so this is what we're using to enter. This is our entry signal template right here. All right, so that's what this order set is using to enter the market. All right, now all this trade fed stuff is dependent upon the size of your account and how much risk you're putting on initially. I'm not doing any of that. I'm just setting the number of contracts right here. So I'm setting the number of contracts to 2 or 3 or 5 or whatever. I'm setting it to 2. All right, so I'm going to enter this Bloodhound signal. When I get this Bloodhound signal, long 2 contracts. If it's a long, if it's a short, I'll enter short, but in this case, it's going to be a long. And then I'm setting that order to fill at market, so I can set the type of order. Now I could set it to a limit, and then when I get that long signal from Bloodhound, I could put it in, offset it by 2 ticks from the close. That might be good. That might be good to test and look at, something like that, depending on the type of signal that you're entering. If you're entering a counter trend trade, then something like this might be good. Of course, you're going to miss every runner that just immediately goes, that never looks back, and you'll catch every single loser. So, anyway, that's beside the point here. So that's what this is. Market entry is just, you're telling it what type of entry you want it to put in. I'm just going to set it to market. No, that's looking at, I just renamed it. I just named it to Bloodhound entry. So you can set the name of it to anything you want up here. But this is the template that it's calling. And yeah, I set volume divergence together with double divergence on the 1 minute. You can open it up and look at it and see what all's in there. This is your volume divergence signal, everything from here left. Here's your double divergence from the RSI. So your 30-minute lower median line, it's your 1-minute channel line, and your 5-minute channel line. So all three of these areas have to come together with volume divergence and double divergence in the RSI. We're trading with the trend on the 30-minute chart. So this would be one very specific signal that I would look for. Now there may end up being 20 of these, and I may be running this on 20 different markets. You know what I mean? Because these are specific rule sets. I think when we get into situations like this, the whole degrees of freedom is not as much of an issue, because while this may seem like a large rule set, each one of these things is an independent thing that we're looking for. So while it may take 7 or 8 different rules to find volume divergence is still just one thing. So this is really considered one rule. So this is 2, and then this is really the same type of a rule but on 3 different charts. So you could call it 5 rules for this entry, or you could call it 3 and looking for confluence. So that's where the whole degrees of freedom thing, you kind of have to set by the wayside, because we're not doing your typical technical analysis with a bunch of strange mathematical equations. We're actually looking at just market, we're looking at geometrical rather than arithmetic type of stuff, which as far as I can tell is the only way to look at the market. When it comes to moving averages and arithmetic, things such as volume-based averages like the VWAP, things of that nature, I think are useful. But when it comes to strange period charts with exotic moving averages, forget about it. Spent a lot of time researching that, so I'm not talking out my ass here. I mean, I know what I'm saying. And when it comes to building out algorithmic systems with all those crazy equations, it's such a waste of time. Such a waste of time. But you have to do it to know that it's a waste of time, unless somebody tells you. So, I mean, just take my word for it, basically. So with this one, we're going to do another market entry, and all of these order sets, all of the entries are based upon this guy right here. This is my entry signal. So I'm stacking multiple order sets per this entry, which is defined in Bloodhound. So I can't believe that we have something like this. I mean, I don't know if you guys really understand what you are looking at here, but this is beyond what anybody has ever done, even remotely close. This is as sophisticated as I've ever seen. It's, beyond all that R3 or R-Trader and trading technology stuff, and you have way more control over what you're doing and what you're looking at and how you're trailing and how you're adding your profit targets and your order sets. Each one's independent of each other. You can build out as many complex conditions as you want inside of Bloodhound. And, there's nothing that even comes close to this. So quite literally the most incredible thing that's ever been developed for trading, beyond any shadow of a doubt. So for this profit target, I'm going to set this one to the 30-minute center median line. Okay. So what do? I set it to an indicator value, right? Which indicator am I using again to access the value of that line, the price of it? The reader value. I'm setting it to the 30-minute chart. but I changed it for some reason. And we're going to set it to the center median line up for a long trade. And if we had the same exact setup, then it would be the center median sloping down on for a short trade. So what is the deal? Why am I doing this? If we're going to reverse up from this lower median line, where would we likely get back to? You know, in this case, we've already broken the center median line. All right. So does that rule apply a second time? Well, I don't know, and I don't know if anybody actually researched that portion of it. But I know that initially, when you reverse from a trend line, you'll make it 80% of the time back to that center median line. And you can go back and test and look at it. I mean, I've spent a little bit of time at it. I think I looked at 100 charts. And that's about right. I mean, about 80% of the time, you'll make it to that center median line. The problem is identifying it soon enough and still having enough room to be able to trade to that center median line. You know what I mean? So while that, you know, is a statistic, taking advantage of that isn't always as easy as, you know, it may sound. With having a statistic that says 80%, you think, oh, well, I can't lose. You know, it's hard to take advantage of it. But anyway, so it's pulled back to the lower median line here. So does that same statistic apply that you're going to make it back to that center median line again if you reverse from the lower median line? I don't know, but it's a good rule. So I'm going to attach my profit target to that center median line, and that just happens to be the exact price from which it stopped on a dime and then reversed back down to come down to new lows. So that's what we're doing. And we're going to displace that, I'm going to say 4 ticks, or negative 4 ticks from that center median line. Because remember, it's a 30-minute chart, so 4 ticks is really not even 5% of the average true range, not even. Well, yeah, 20, 80, I don't know, yeah. That's plenty. So 4 ticks from the center median line. All right. So that's how you do it. Now I'm setting 4 ticks below the upsloping center median line for a long trade to exit 2 of those contracts. You could even offset it by what? By an ATR amount. So I could, if I wanted to get cute, actually look at, well, here's the problem. You can only look at the average true range of the chart that BlackBird is on. All right, so when we finish building this thing out, I'm going to build another reader that will allow you to access the ATR, probably a handful of moving averages, the divergences pro signals, the relative volume signals, and maybe a couple of oscillator signals from any chart. So NinjaTrader will, you know, you'll be able to do much more in Bloodhound without slowing Bloodhound down. Because when you bring in all of those higher time frames and all that stuff, then it gets a little bit bogged down. So we're going to say 30-minute center median line. That's the name of this one. We need to go back and name this one too. And then we're going to trail it based upon, so action closest to price, add new. We're going to trail it based upon, well, first of all, we're going to trail it every single bar, so we don't need a trigger, because we're going to repeat it indefinitely every single bar. And then we're going to move it with the value of that indicator, which is the reader value. RJ, is that Mr. Raul Jimenez? Or is that a different RJ? reader value. And then the 30-minute chart, center median line up for exiting a long, center median line down for exiting a short. Okay. And then we're going to do it offset by 4 ticks consistently. And that's how we're going to adjust the value of this profit target every time that center median line adjusts its price, which will be increasing with every new bar. Obviously, it's a very strong upslope. It's going to offset that profit target below the center median line 4 ticks every 30-minute period. And then we have named it 30-minute center median line, which is going to be order set B. And then this one is going to be 5-minute I guess we'll just say baseline. Say trend line. And then we add the stop loss. We're going to offset 10 ticks fixed. And then we're going to, I guess I'll name it, we're only going to trail this one behind wide-ranging bars. High volume, wide-ranging bars. I'm not going to differentiate between range, but I'm going to look for extreme spikes in the relative volume. So we'll say extreme spike. And yeah, it's a stop, of course. We're going to say indicator value. Now this is a little bit tricky, because, I mean, for one thing, you have to make sure the indicators match up perfectly inside of BlackBird as they are on the chart so that you're getting the exact same signals. Relative volume. Now I have it set to 5 days back. We don't need to detect any bar colors, so I can turn all that code off. And I'm looking back 300 bars in the dunking channel, so we're really looking at, you know, are we breaking out to new highs or new lows truly? And if we are and we get an extreme spike in the volume, I want to tighten my stop up below the low of that bar, just in case that is a major swing high. And then for a long trade, we're looking at extreme spikes at the high, because we want to tighten up our stop below that bar. And then for a short trade, we're looking at extreme spikes at the low, because we want to tighten up our stop above the high of that bar as we're coming down to protect what we've earned on the trade, which is something I really should do, you know, in the room, but I'm only just now able to trade more than 4 contracts. You know, I'm typically waiting until a full $10,000 to trade 1 contract. So I've only just now gotten up to 47,000 from 10,000. So now I can trade 4 contracts in crude, which, you know, we did the other day and made, I don't know, $3 grand. A couple of days before that, made 4,500. And so now being able to tighten different stops up and doing different things with trailing the targets, all of that makes more sense now when you have more contracts that you're able to trade. I haven't really done all the statistical work that really needs to be done to find out, you know, is it actually better to kind of scale in and out, or is it better just to do all in, all out? Sometimes I wish I would do all in, all out, because then I would have quadrupled my profits. And it seems like when I take a stop, I take a full stop, you know. That's stuff that's really hard to test and test well, because you have to have a really huge set of rules well defined to be able to properly test stuff like that. So at any rate, we're looking for extreme spikes to trail our stop behind. don't need to displace it, but I am going to offset by 2 ticks below the low of the bar. Now, yeah, so 2 ticks below, right. Now, okay, guys, this is what I should have done in the trailing action, right? So let's start over here. All right, when I'm adding the stop loss, I'm adding a fixed 10 ticks, okay? This is fine. That's the way it is, right? What I just tried to do is define the trail right here. This is not the trail, this is the initial. All right, so now I'm just going to run through that really quickly. So the trail is under the trailing actions. So custom and then add a rule. All right, this is where I develop the rule that I want for the trailing stop. Okay, you're not trying to develop the trailing stop under the initial placement of it. This is the initial placement. You see, type, stop, initial placement, 10 ticks below the entry price. What do I want to do with it after that? Well, I want to trail it when, this is the trigger, when, here is where I'm going to put it. Where do I want to put it? That's the action. Repeat, that's how many times do you want to do it and when. The trigger is what's going to happen to make me move this stop loss order. Well, when I get an indicator value of, well, we'll get into that in a minute. When I get an indicator value of 1 from an extreme spike at a high, we'll trail up the stop behind the low of that bar if we're in a long trade. When I get an extreme spike value of 1 for an extreme spike at a low, because these are in their own data series, each one is 1 for on, 0 if off. So if we have an extreme spike at a high, it's going to give 1 in that data series. If we have an extreme spike at a low, it's going to give 1 in that data series. It's on or off, true or false. True is 1, false is 0. On is 1, off is 0. So just remember those bars, each bar is associated with a number from these indicators. It's either going to be the value of the price or it's going to be a number set in a data series, which is typically going to be a bool, which is true or false, on or off, or an int series, or let's say a data series, which can look at decimal places, but say an int series is looking at 0, 1, 2, 3, or -1, -2, -3. In this case, it's really just an int series. Well, I don't want to get into all that. It's basically true or false, which is a bool that we're getting for every bar 0 where we don't have an extreme spike, and then 1 for every bar where we do have an extreme spike. I'm not looking at that. I'm looking at relative volume. Probably just confused 15 of you. I want to turn all of this stuff off so it doesn't affect Ninja's performance. Is this interesting to you guys, or is it just mind-numbing? Extreme spike at a high for a long trade. Extreme spike at a low for a short trade. Both, yeah, right. I'll set that to 1. Yeah, so 1 and 1 for the relative volume when you're looking for those spikes, because it's on or off. It doesn't matter if it's at a low or at a high. All right, it's always 1. For a bar that doesn't have a spike, it's 0. So we're looking for a value of 1. So it's got to equal, right? It's got to be equal to 1 for the long, and it's got to be equal to 1 for the short. And if it's equal to 0, then it's not on. If it's equal to 1 for the long, then that means we're getting an extreme spike in the volume at a high. If it's equal to 1 for the short, that means we're getting an extreme spike at a low. Okay? And then we're good. 1 and 1, TTP relative volume. We're going to move it up to the last, actually the low for the long, last bar, but the low of that bar, whoops, low of the bar for the long. Look back period 1, that's fine, because that's the current bar, essentially. When the bar closes, that's the bar. Single value, we're not, this is getting into the look back node in Bloodhound. Very cool the way he did all this stuff, but I don't want to explain it now. It would take me a good half an hour to explain all that. And we're going to offset it by -2 ticks below that low, and then 2 ticks positive for a short, and then the high. Yeah, see how it automatically finds the high when I set the low here? And that's good. Does everybody understand this? When we get an extreme spike at the high, it's going to tighten that stop loss order to sell, close that long position. It's going to tighten that stop loss up behind it here. So just to explain it practically, we're going to be coming up. Oh gosh, I just did all that and it didn't save. We're going to be coming up, and then all of a sudden we're going to get this spike straight up with very high volume. All right, so we got a bar here, and then a big bar right there with a little extreme spike at the top. When that happens, when that bar closes, we're going to tighten up the stop loss order, which is down here to right here, 2 ticks below it. And then if we get another one right next to it with an extreme spike, it's going to tighten up right there, -2 ticks. So that's what it's doing. Yeah, it got it. It saved it. And we're going to do this. We'll repeat it 2 or 3 times. We'll say 3 times. We could just say indefinitely, but it doesn't really matter. And I'm going to say repeat only when, well, now this is curious here. Aha, okay, I know what it's going to do. All right, so this is cool. I didn't really get into this because I didn't take it that far, but all right, this is the trigger to turn the trailing mechanism on. All right, so when we get that big extreme spike at the high, it's going to turn the trail on. All right, and then we're going to move the stop up 2 ticks below the low of the bar. So it will continue to do that for every single bar thereafter, right? If I set it to every, this many bars, and it'll do that every bar. Or I could set it to do it, 3 times, but only if we get another extreme spike. All right, so that's what I'm going to do. And then you'll see what happens. So that's pretty cool. I didn't think about that. But that just goes to show you, he's thought of everything. It's really, the only thing he didn't think of was attaching orders to indicators after the fact, but it's something he's going to add. I'm trying to work with him on doing that now. So you could attach it, you could do it every number of ticks against the, no kidding. Huh. So after you've had a certain pullback in direction, against direction, or even seconds. Huh. So if you had this on a tick chart, you could wait a certain number of seconds or minutes. That's pretty awesome. Unbelievable. Unbelievable. So now for the next order set, we're going to go market entry, 2 more contracts. we're going to do a simple 100 tick profit target, 100 tick, and we're going to just name this 100 ticks. Okay, and then we're going to add a stop, 10 ticks fixed initially, and then we're going to trail it custom. We're going to add a new rule. Is anybody able to follow along with me doing this on their own? It's really the best way to learn, besides just getting in there and playing with it yourself. Let's see. I'm going to try to come up with something else for this one. What for the 100 ticks? I'm going to say when we get, I'm going to do just a fixed. So when we get, this is weird. Yeah, okay, there we go, ticks. So when we get 50 ticks, profit target, that's pretty cool. Huh. So when we get 50 ticks profit, then I'm going to move that up to the most recent swing point, and I think I'll use a faster swing. I'll set it to 3, so then maybe we get some different swings in there. I'll set it to 2, a real fast one, and then I'll do 2 ticks offset from that. Yeah, 100%. Yeah, so everybody understand that. So when we get 50 ticks profit on this trade, then it's going to start trailing that stop up behind the most recent swing lows, but it's only going to require 2 bars to identify a swing high or low. So that means that there would only need to be, for a swing low, its low only needs to be lower than the previous 2 bars low. And then the next 2 bars must be higher than it to identify that as a low. At least in this algorithm. In my algorithm, it's much faster, but we don't have access to that yet. So now I'm going to do this indefinitely, and I'm going to check it every bar. And I don't have to re-trigger it, right? Because once it hits the trigger, 50 ticks, then it's going to essentially keep the stop set to the swing low value as it adjusts, and it will adjust on its own. And then it's just attaching to it. So every bar it's going to search for the value of that swing low and then keep updating it. And that's it. So that's done. Boom. And now we're going to enter market 4 contracts, add a profit target, and attach it to an indicator value. And we're going to attach it to the 61.8% correction. And how do I do that? I do that using my fib retracement indicator, auto fib retracement, and it's for a free download on my website. You can go there and download it if you haven't already. You may not even know it's there. But I'll be building a much fancier version of this here in the next probably a month and a half or 2. Yeah, so that's it. I've set it to a swing strength of 7. This is a terrible swing indicator. It's Ninja's default system swing indicator, which is garbage. And we're identifying the 61.8 correction. It's not, I can't say, well, it's garbage because it waits so long to adjust the swing values, but for the sake of this demonstration, it is giving us the 61.8% correction of the previous swing down. So it's at least an area where you might get some resistance. And in this case, you do get some resistance there. So we're going to take 4 off there just to initially lock in some ticks and eliminate some profit. So it's named 61.8% retrace. And then we're going to trail it. No, we're not going to trail it. We don't need to trail it. That's it. That's all. I will offset it 2 ticks. Yeah. And then stop loss again is going to be 10. There's no trail for that. And then this order set is going to be a limit entry. This is how I designed the scale in. Right? Jeremy was kind of thinking that, well, we don't really have a scale in option. But yeah, you do. You just have to set it up kind of a different way. I mean, it's not like you can say, this is my scale. I'm going to scale in this many when this happens. What we're doing to scale in is we're setting a limit entry. So basically, if you want to scale in, you have to already have that predefined, which you would have to do anyhow if it were going to be an automated system. But if you want to scale in, all of those orders need to go in at the same time. So we're buying 10 contracts market, all right? But if I'm going to exit 4 of them early at the 61.8 retracement, and then I want to buy those 4 back at a better price, I need to already have that predefined. So I'm going to put in my limit entry, and I'm going to offset it by, well, we'll get back to this. I'm going to offset it by 10 ticks. Sorry, 20 ticks. Negative 20 ticks. Okay. So what does that mean? That means that if my stop gets hit 10 ticks below the entry price, this order is going to be sitting there to buy 4 back 20 ticks below my entry price. So 10 ticks below my stop. I could put it anywhere. I could put it at, 30, or I'll just say negative 30. And then mirror that for the other side. So what does that mean? That means I need to cancel it, right? So this is going to be my scale in. I need to cancel it if that stop is hit. So what does that mean? 10 ticks against the direction. Ooh. This may be a problem. I didn't test this yet, actually. All events trigger. First events trigger. The first event triggers. All events trigger. So if it happens anytime, or if it happens the first time, well, it would be the same result. So that's curious. I don't know if that's going to completely cancel it. Yeah, I guess I would set it to 11 anyway, just in case. Just in case it doesn't, comes down 9 ticks. I'm not sure how that would react, if it would actually be on top of the stop or what. But here's what I'm worried about. So if I set it to 11 ticks against the direction, well, what if it goes up 20 ticks and then pulls back 11 ticks? Is that going to cancel it? I'm thinking that it will. Not positive. All right, so we'll test that right now. It's one thing I have not tested yet. Okay, and then we're going to trail that. Now here's where we're going to initiate the entry of these 4 contracts. All right, well, basically, when am I going to bring it up above the stop so that it could be filled? Well, what I'm going to do is once we fill these 4 at the profit target, which is the 61.8 retracement, once we fill that order, then I'm going to go ahead and bring this one up high enough to buy those 4 back at a better price. Let's say 15 ticks, just to kind of lock in, 25 or 30 here, and then buy them back for about a 15 tick discount if we get the pullback. So we'll trigger that on an indicator value. So when we actually hit the 61.8 retracement, I have that set to 7. So when we actually hit the 61.8 retracement, 61.8, 7. No, sorry. Not an indicator value. Price versus the indicator. When the high of the bar for a long trade touches the 61.8 retracement. Sorry, so not indicator value. That doesn't do me any good whatsoever. So price versus indicator. All right, so the indicator, again, is going to be the auto fib retracement. I'm trying to remember everything that I had done before, and it's coming back to me. So auto fib retracement. I'm trying to keep it simple enough so that we don't have to use Bloodhound to do these simple things. 61.8 retracement. So when we fill that, it's going to have to hit -2 ticks below it. So I'm going to say when we get to -3 ticks to ensure that we get filled, so that it has to tick through it before I try to buy 4 back. I want to make sure that these 4 have been sold before I try to buy these 4 back. And it's set to 1 right now, but it needs to be 4. All right, so that means I'll set it 3 ticks under that 61.8 retracement, so that when the bar actually hits it and fills it, then we will move this buy limit up to 15 ticks below. All right. So I'm going to displace this by 1 bar. Basically, I'm going to wait for that bar to close before we do this. Actually, no, I'm not. I'm going to do it in real time and see what happens. Yeah, so basically you'll see it get filled, and then you'll see the limit order come right up to 15 ticks below price. So now, when price is equal or above for a long, when price is equal or below for a short, right? So that means, and it's price, so it's going to be basically any point on the bar. So when the high of the bar is touching or equal to 3 ticks below the 61.8 retracement, then we're going to tighten this buy limit 15 ticks below the close of that bar. So when that bar closes, then we're going to move price up 15 ticks. What happened here? Goodness gracious. There we go. And last, I guess, is the same thing as the close when you're using calculate on bar close false. So we're going to tighten it up 15 ticks below the last price, which is going to be the close of the bar that touches this 61.8 right here. So the next bar will tighten that 4-tick profit buy limit 15 ticks below the close of that bar. This will make sense when we do it. And then we're just going to do that once, just one time. And now if we fill it, where do we want to get out at? I'm just going to say 25 ticks. Be done with it. $25 ticks. Okay. $25 tick target. No trail, no nothing. And then the stop loss, 10 ticks. All right. And that's going to be for 4 contracts. So we should be good to go. Pretty neat, huh? So that's it. We have it. That is at least a good start to it's taking a little while to save there, isn't it? Whew, I got to take about a 2 or 3 minute break, guys. I guess that's good. So all of you probably need to take a small break. RJ is asking, you took the first 4 off 2 ticks below the 61.8 and now moving the 4 to 15 ticks below for an entry. No, I'm not moving it 15 ticks below. See, by the time we hit it, the 61.8 might be in a different spot. Oh, and by the way, I did that backwards. This needs to be at, rather than -3, it needs to be at -1, not -3. I had it backwards. Just remember that. So -2 will fill it. -1 will ensure that these 4 have been filled, because remember, these 4 are sitting at -2. So if we're going up and it's 2 ticks below it, this needs to be -1 so that I ensure that these sitting at -2 have been filled. Does that make sense? So we'll set it to -1 to trigger that. It's convoluted a little bit, I know, but it's good. It's good. You'll start to understand the more you work with it. Yeah, I mean, Jeremy is just an incredible mind that did this. I mean, think about it. It's crazy. So calc on bar close equals fast. So RJ is saying you could get an extreme spike right into a 61.8 and drop down on the same bar. I'm not sure. Maybe you could draw me a picture of what this. So what's the problem? You're saying so that as that extreme spike is building, go ahead and put in the stop 2 ticks below its building low, so that just in case it does completely reverse on the same bar, you're already taken out. Yeah, those are things you'll have to think about. And, see if it's worth it to run it on calculate on bar close false or true. I think if you're running it calculate on bar close false, then you can set it to calculate once per second, and that might not bog Ninja down that bad at all. But anyway, we're kind of tailoring this to this trade here. Uh-oh. Let me make sure that's saved. Yeah, it's saved. You know what I mean? This isn't like the exact set of rules that I would use for every single case. He asked me, hey, can you come up with something to kind of show off the capabilities of this and just kind of learn what the capabilities are and then build something that will show some of the details off. Like, yeah, okay. So I did, and this is just what I came up with. So this is me just starting to get into this. And this is just a simple example. So what we're going to do is we're going to take a 3.5 minute break. All right, it's 5:09 and 55, 56, 57, 58, 59. It's 5:10. So we'll meet back here at 5:14 in exactly 4 minutes. So get some water, splash some water on your face, and then we'll see this in action in 4 minutes.